Hello, everybody. Hello. Welcome back for another video. Hope you're all doing well. Hope you're all doing great. Hope you're all having a fantastic day and that you're all doing well. Don't forget to follow me on Twitter and on Facebook. There are links in the description box below. And without any further ado, let's jump right into it. The cryptocurrency space is crazy, my friend. I really need to tell, just perusing around, looking around for any kind of news feels sometimes like a literal fever dream. It is a constant mixture of price predictions, expectations of prices going up. Someone said something to someone and they had a problem with it. I don't have it in this video, but there was something. Oh gosh. Someone said something in the direction of Cardano and Hoskinson got mad. It's every single day. But we're beginning to find out a little bit more about some things that we previously knew about. You'll see what I'm talking about. And I knew this from the beginning. We went over this last year, but now people are beginning to talk a little bit more about it. On top of that, there's a non-stop flow of news regarding companies and institutions buying. It is out of hand. I was going to say it is getting out of hand. No, it's definitely already there. But a lot of the impact in the future is going to be felt quite heavily by investors who are just not paying attention. And I mean that in the most honest and stern way possible. Like, actually take my word for it. I try every now and again to see if I can get the imagination flowing of friends, letting them know what's going on in the market, and there's still absolutely zero retail interest. Not to sound ominous, but people will learn. They'll understand when they don't have any crypto assets, that the future is going to look different for them than it will for you. Japanese investment company Metaplanet has issued an additional $21 million in zero interest bonds to Evo Fund, a Cayman Islands-based investment firm, just a day after announcing a separate $50 million raise, further accelerating its Bitcoin accumulation strategy. Metaplanet, up until 2 months ago, was announcing that they were buying Bitcoin, I want to say every 2 weeks. Every 2 weeks sounds about right. And then they were announcing they had $500,000, $1.4 million, it was lower numbers. But for some reason, the last 2 weeks, they really upped their ante. My speculation would be that we keep hearing these larger numbers from MicroStrategy. I don't know if you just saw it. We had, 10, 11, 12, 13 days worth of nonstop inflows into the Bitcoin ETFs, BlackRock being, of course, the largest one. And institutions have really turned up and ramped up their purchases as of late, and it's getting a little intense. Once again, if you've seen the last 30 videos, you know exactly what I'm talking about. This is now daily. So they announced that they were raising $50 million, or they raised $50 million to buy more Bitcoin. And then they raised another $21 million. They previously, 5,000 or 6,000 Bitcoin? I forgot exactly how much they had, but they are very close. Very, very close to their 10,000 Bitcoin that they want to raise this year. the assumption was they would get it by December, if they say this year, but they're probably going to pass that very soon. And then their next goal is 21,000 Bitcoin. The 17th series of bonds issued on the 29th of May comes with a face value of $500,000 each and will mature on the 28th of November 2025. Unlike traditional debt instruments, these bonds yield no interest. Okay, allowing Metaplanet to borrow without additional repayment costs. I still don't understand how or why a company would do that, but bless their hearts. Under the terms, Evo Fund is entitled to early redemption by giving at least 5 business days notice. The bonds can be redeemed in full or in part in multiples of $525,000 per bond. Metaplanet may also trigger redemptions tied to future fundraising rounds involving the same investor depending on cumulative payments. Yeah, they're really ramping it up. It's I'll admit I did make fun of them towards the beginning of the year because they had, what was it, like 400 Bitcoin or something like that? And they were like, yeah, we're going to have 10,000. And I was like, well, I don't know how that's going to work out, but here I am completely proven wrong. So once they actually do purchase Bitcoin with this 71 million US dollars, we will definitely hear about it because they are quite keen to give press releases on their purchases. Makes a lot of sense. Tying directly into this as well, French crypto holding firm called the Blockchain Group has intensified its Bitcoin accumulation strategy following a successful 63.3 million euro bond issuance. The company, listed on the Paris Stock Exchange under the ticker symbol ALTBG, revealed that 95% of the proceeds will go towards accumulating an additional 590 Bitcoin, taking their holdings to 1,437 BTC. Now, this one, I wish them the best of luck, ? The move is part of a long-term ambition. They want 1%. They want 1% of Bitcoin's total supply. They want to have 170,000 Bitcoin by 2032. I wish I could explain how unrealistic that actually is, but okay. If you missed one of the recent videos, was it Sentiment? It was some analytic company. They stated by next year, they're expecting, oh gosh, what was it? I don't remember. I can't remember the percentage number. Long story short, MicroStrategy and BlackRock and like 2 other companies are going to basically own almost all that's left by next year. And that's not including 21 Capital and all these other companies who we hear about. So the ambition's great, power to you. But having 1,400 Bitcoin and wanting 170,000 Bitcoin while going through the next 2 halvings, when Cathie Wood and the like are all talking about a multi-million dollar Bitcoin by the time we get to 2030, you would probably, whatever. The point of the matter being, yeah. So I think this isn't tinfoil hat. This is just complete logic. I think something's happening behind the scenes that we don't know about. It's too coordinated at this point. We have always just had 1 or 2 companies who were announcing that they were buying, and it was usually MicroStrategy and some other outlier in some sort of way. But to have like 20 companies constantly announcing daily that they're buying more, something's going on. You would normally not as a company weekly issue tens of 20, 30, 40, 50, 60 million dollars worth of debt against your company. Normally, you wouldn't do this, especially not when it comes to buying Bitcoin. There's probably some other very large player behind the scenes who is getting ready to make an announcement or who's buying a huge amount. Maybe there's some country, something's going on because it's it feels a little bit too the word's not planned out, but like everyone's kind of following the leader. But why would you be doing that unless you know that the leader is actually doing something? On top of that, price predictions continue to make their rounds. The expectations for June are roughly anywhere between a $120,000, $130,000 to a $150,000 Bitcoin. If you missed about 10 days ago, there was a lot of news about July for whatever the charts may be showing. Expectations are, according to analysts, if you're not looking at the screen, Tom Lee is talking about Bitcoin entering the banana zone because, you know, why not? You gotta have a weird campy name at this point. And people are talking about that by July, we would see anywhere from a $150,000 to a $200,000 Bitcoin, which would make a lot of sense if all this accumulation is actually happening and all of these institutions are buying and hoarding. And we keep hearing at least once a week about a brand new treasury company. So we're hearing about a lot of companies who are like, yeah, we're buying Bitcoin. We have a Bitcoin reserve. But then you have the other larger ones who are like, no, we're only buying. All the money we make will just be to buy more. And we never plan on selling our coins. So yes, here's the part 3 of what we were talking about in February. I know time is flying by. I'm getting all these things on Instagram like this many days until Christmas. And I'm like, isn't it still January? It's not? Okay. So yes, the April, May, and June. You might remember we heard from a lot of analysts earlier this year that April, May, and June would be spectacular months for prices. Thus far, I'm giving a light thumbs up just because prices should be a lot higher. But in case you missed it, all the rumblings around tariffs are still causing a lot of uncertainty. However, for good or good, during a lot of these weird stock market times, the cryptocurrency market is usually holding its own and kind of just going sideways, which is a lot better than just going down. So apparently we are in, should be, the banana zone. Something's happening, banana bada bing bada boom, or something along those lines. Right? That's the optimism news. And yeah, let's move on. I figured that this was going to happen. I didn't know how it was going to unfold in some sort of way. If you didn't see, this was a 4, 5, 6, 7. This must have been 7 or 8 days ago, somewhere around there. I don't know if you saw it, if you were on Twitter or maybe your corner of social media was also talking about it. Somebody wrote, maybe he sold. And I was like, okay. And then I kept on seeing people write, maybe he sold, and I was like, okay. And then I saw, I believe it was Changpeng Zhao, the former CEO of Binance, who also wrote maybe he sold as well. And I was like, what is everyone talking about? So Michael Saylor has been a very interesting figure within the cryptocurrency space. A lot of people who are newer to the space, and I dare say it this way, who don't know like the older teachings of Bitcoin, usually conflate or confuse the idea of a Bitcoin maximalist with a Bitcoin bull. A Bitcoin bull is someone who is trying to make money off of Bitcoin, who thinks that Bitcoin's price is going to go higher and that they can profit from it. A Bitcoin maximalist is someone who doesn't really care about the price, who understands that decentralization is key, that transparency is a huge part of what makes this entire thing work. Bitcoin's network security. They are adamant that Bitcoin remain the same, as far as like its core, its main chain doesn't change. Everything else can happen on layer 2s and layer 3s, but Bitcoin is for humanity and for the world. You might remember, this was a month or two ago, we had news from Adam Back, the head of Blockstream. During a conference, he was on stage and someone was asking him, they said, who is Bitcoin for? This was towards the beginning of this like ramp up of institutions announcing Bitcoin, 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 like announcing that they were buying, we're getting into it. And he said, this was the test, because Adam Back said the people who should be buying Bitcoin are normal everyday people. He said it's people walking around in the streets, living their lives. They should own Bitcoin and should be buying up Bitcoin before any institution, before any company, because that's who Bitcoin is for. So he definitely ticked a bunch of boxes, in my view, as someone who's like, okay, I get that he's rich, but he's also here for the cause, if you will. Michael Saylor is a Bitcoin bull, and the confusion has come up from the fact that this man has said that he likes Bitcoin because it's making him money, and he wants more Bitcoin because it's making him money. Last year, we got a preview of some of this when he was on a panel, or he was asked, I forgot exactly what it was, and he said people who don't trust banks are idiots. You can find the article, you can Google it, type in MicroStrategy, Michael Saylor, Banks 2024, it's going to pop up. He stated that I don't understand why people don't like banks. Banks are cool and awesome and great, and anyone who doesn't want to give their Bitcoin to a bank is expletive. And I was like, okay, got it. The reason why we have Bitcoin is to get away from the banks. So you know how we keep hearing news that JP Morgan, Bank of America, are getting into Bitcoin and crypto and stable coins, and you can't see me, but I roll my eyes. That's the reason, because they don't actually care. They're Bitcoin bulls because they want Bitcoin to make them money. So basically, he tried to save it the next day by saying that MicroStrategy was trying to turn into a bank to lend out Bitcoin. If you also know the original ideologies of Bitcoin, that's not supposed to be done. The idea of Bitcoin is that you have what you have and you own what you own. The idea of getting someone into debt with Bitcoin is like the knowest of the knowers of the knows, also in line with paper Bitcoin, like the idea of like the actual ETFs not actually giving physical Bitcoin to the people who are investing in it, but actually like saying like, here's a piece of paper. Yeah, you sure own Bitcoin, because this is similar to what banks already do by saying that they have X amount of cash, but never want to actually show how much cash that they have. So then this happened, and I was like, well, sure. I think the majority of people won't care, but I think it's abundantly clear at this point that he doesn't care. And I know that many of you might not care, but that's also because a lot of people have interesting ways of living. And irrespective of everything that we've been going over, there's still a lot of people who don't understand Bitcoin, what it's for, who it's for, or what it's going to do in the future. So a lot of times, people who are not billionaires tend to try to side with billionaires because they think that some of their magical energy will rub off on them. But no, Michael Saylor doesn't actually care about anything in this market, probably except for himself and his actual company. Michael Saylor, executive chairman of MicroStrategy, has raised serious concerns about the practice of institutions publicly sharing their crypto proof of reserves. If you weren't here after, this is also, another, red flag during the entire FTX fiasco. The idea was back in 2022 that apparently Sam Bankman-Fried and FTX did not have crypto reserves. They did not publish and show people, I have 1 million Bitcoin, here's 1 million Bitcoin, proving that they actually had what they said they had. That's why afterwards we saw every crypto exchange announcing their proof of reserves, and Binance, I think, was the largest, if I can remember correctly. I think Binance has a 102% or 103% of their reserves. So instead of, just for example speaking, instead of just saying we have 1 million Bitcoin, they actually have 1,003,000 Bitcoin. Should theft occur, they actually have extra money to be able to give people back their money. You understand what I'm saying? Michael Saylor said that's not for him, and he thinks that institutions showing how much Bitcoin they have doesn't make any sense. Do you want to know why? Because he doesn't actually care about Bitcoin. One of the major things when it comes to the banking system is that there is zero transparency. We know nothing. You don't even really know how much money is in your bank account. If you have over 6 figures and dare I say 7 figures in your bank account and you try and take it all out at once, like in a check or in cash, do you know what the bank teller is going to tell you? It starts with the letter N and ends with the letter O, and that they'll have to talk to a manager and can you please come back at another time? Because that's the way that things go. So since 2022, things got ramped up a little bit. And everyone became very concerned. And this is why a lot of times you've seen whenever when any company, whether it be Metaplanet or this company or so-and-so, they'll tell us, we just bought 525 Bitcoin. They don't use in the articles, they don't say the wallet addresses, but they usually publish these things so that we can see transparently that they bought them. So when Michael Saylor said, that doesn't make a lot of sense, that's when people started saying on Twitter, maybe he sold. The part being is that MicroStrategy said that they would never sell. Michael Saylor has raised serious concerns about the practice of institutions publicly sharing their crypto proof of reserves. Speaking at a side event during the Bitcoin 2025 conference in Las Vegas, Saylor called the widely adopted transparency method a bad idea. Do you want to know? I'm pretty sure you can figure it out. The idea is that we need transparency in this space. If we have transparency from the beginning, we will have transparency going forward. What's to stop me or you or anyone to stand on stage and say, I have 135,000 Bitcoin and I'm going to have another 200,000 by tomorrow. Eventually, by the end of the year, imagine me standing on stage saying I now own 1.3 million Bitcoin across 72 different wallets. What proof do I have? What if I had moved the market? What if I had caused some level of market manipulation? This is why the point of transparency in this space is to show that we are not the old system, that we are better, that we don't have to lie to each other. We can tell the truth and still make money. Michael Saylor has called this a bad idea. Saylor was responding to a question from Blockware Solutions lead analyst Mitchell Askew, who asked whether Strategy would consider publishing its own proof of reserves. While Saylor did not provide a direct answer, he made it clear that he believes the practice is fundamentally flawed. He said, and I quote, "The current conventional way to publish proof of reserves is an insecure proof of reserves," he stated, adding that it weakens the overall security framework by making wallet addresses traceable. Bitcoin has made wallet addresses traceable since 2009. It's the entire point of it. This is how we know how much Bitcoin is in the Satoshi Nakamoto wallet. This is how we know that there's no money flowing out of that wallet. For those of you who don't know, Satoshi was obviously the original person who was mining Bitcoin. And back then, it was roughly like every 5 minutes, you were getting 50 Bitcoin. There's a wallet address with over 1 million Bitcoin inside of it. It is widely believed that the person who might have most likely been Satoshi was called Hal Finney, and that he actually passed away, I want to say 2013 or 2014. And that wallet address is basically a black hole now. So imagine if we had all constantly heard that there was this wallet address with this much Bitcoin inside of it, and then we kept on seeing the coins moving out of it. without knowing that they were actually moving out of it because of a lack of transparency. The push for proof of reserves gained momentum after the high-profile collapse of crypto exchange FTX in November 2022. In the wake of that event, Binance, Kraken, OKX, and Bitwise began publishing cryptographic proof that they held enough assets to back customer deposits. That's how you show that the funds are safe and that you're not lying. This, of course, caused a cryptocurrency hurricane. Everyone began to be quite interested in exactly what was going on and why he would assume. And if you want to, so if you've connected all the dots, he's trying to turn MicroStrategy into a bank. Banks do not publish their reserves. It's meant to be their information and theirs alone because they're used to being corrupt and having to not give information to the public. Imagine telling people you have to hold your money in a bank and then making sure that you don't give them any reason to trust you. So, as you might have imagined, one of the things that they want to do at MicroStrategy in the future as a bank is to lend out Bitcoin. The issue would then be we would never know how much they're lending out or if they're actually lending out Bitcoin at all. A bank can literally say, hey, yeah, we're going to lend you $35 million, but that money is just on a screen. We don't know if they've given you a credit or if that's actual money that's been deposited into your account. There's no transparency in the banking system. So imagine in the future, this company holds 1 million plus Bitcoin. And they start lending it out. But then at some point, someone does the math, and it comes out to 3.5 million Bitcoin that's been lent out. Paper Bitcoin. This is what the banking system does. Banks are never required to hold as much money as they say that they have. I forgot exactly what the ratio is, but a bank is in essence allowed to tell you that they have 10,000 for every 500 that they actually hold. So, of course, we had a lot of sleuthing going on. People and a number of companies these on-chain analytical companies began to look all on-chain. Surprise, right? Yeah. And they, one called Arkham initially found $48 billion worth of Bitcoin that was actually tied to Michael Saylor and to MicroStrategy. As it says, CEO Michael Saylor previously declined to reveal the company's addresses for security reasons. That makes no sense because me knowing your address doesn't mean that I can... Listen, that would literally then mean that every person who can code on the planet would be able to simply code their way into the blockchain. That's not how it works. Security reasons is just a reason to say we don't want to actually do it. Why should we give you the numbers? Arkham then found 48.8 billion US dollars worth of Bitcoin that is held in their actual addresses. And then they went a step further. Where is it? Is a number somewhere around here? Then they found an additional 70,000 Bitcoin on top of that, bringing it up to $54.5 billion. They have currently found 87.5% of the Bitcoin holdings that they said that they had. I do assume in the very near future, if they did indeed buy this much, they will all be found. People will know exactly how much is in each of these addresses. So yeah. If you actually plan on being in this space for a long time, I would highly recommend research what Bitcoin is. Actually, I don't get the idea of not wanting to research, not wanting to learn, not wanting to expand your mind and kind of just doing nothing. No, read about what Bitcoin is, who Bitcoin is for. Read about Bitcoin security. Read about transparency within the market. Listen to the old videos from Andreas Antonopoulos that I keep telling you about. Right. Not that their addresses should have been found. It's just more of a they should have been disclosed from the very beginning, because that's literally the point of this space. If we just end up like the banking system, what's the point of Bitcoin? We might as well just walk over to JP Morgan Chase and start doing business with them. Anywho, yeah, this was major news. This was, I told you all last year, Michael Saylor doesn't actually care about Bitcoin. He just has a lot of it, and he realizes that he can make a lot of money from it. So when I keep telling you, why are you letting these people become rich off of what belongs to you, what belongs to the public, that's still the question mark in the sky. Bitcoin is not for the people who are already extremely wealthy. It's for everyone else on the planet to get away from the banks and the old system. So when you have a Bitcoin company trying to become a bank, red flag. That's going to do it for this video. I do hope that you've all gotten something from it. I do hope you all are having a great day, morning, afternoon, evening, wherever you are, wherever you might be. I do hope it is absolutely fantastic. Thank you all once again for watching, listening, liking, commenting, and supporting, and I will most certainly be talking to you all soon. See you.